Hey traders, and welcome back to another video of Nova Forex. So, in this video we would explain the concept of breaker blocks. We would first explain what are breaker blocks, and then we would share the best strategy that you can use along with the breaker block in order to make up a profitable trade into the market. Now before we move on into our video, if this is what that you are interested in, then don't forget to subscribe our channel as we upload new and effective smart money trading videos every week. Let us move on into the video. Let us first learn what are breaker blocks. The breaker blocks are those order block zones which are not respected by the market, but instead it has changed its character from bullish to bearish or vice versa. So, in a bullish scenario, a breaker block occurs when the market goes below the demand zone and then it comes again to this zone and then continues moving downwards. Similarly, in a bearish scenario, the breaker block occurs when the market breaks above its supply zone and then comes back to this zone and then it continues moving upwards. Let us learn this concept on chart. So, as you can see here, that the market is making higher highs and higher lows, which indicates that the market is in an uptrend. And then we see market coming to this order block zone. Let us see how price reacts when it reaches to the order block zone. So, as you can see here, that the market made big bearish imbalance candles when it reached to this bullish order block zone. Now this is where a lot of impatient retail traders gets trapped as they set their buy limit order at this demand zone. When the market makes this type of order block, which we call breaker block, it indicates that a reversal may occur very soon into the market. Now after the market has made this big bearish imbalance candles, we would consider this zone as supply zone instead of demand zone. And thus, we would wait for the market to come back to this zone in order to initiate our short trade into the market. We would initiate our short trade into the market from this point. And as you can see that we made nice profits by using this breaker block concept. Now let us see one more example in order to make sure that you understood this breaker block concept properly. So, as you can see here, that the market is making lower highs and lower lows, which indicates that the market is in a downtrend. We can see that the market making big imbalance candles which created inefficiency. And thus we would draw the order block zone from its previous small candle. Now let us see what happens when the market reaches at this supply zone. So, as you can see here, that the market made big bullish imbalance candles when it reached to this supply zone. A lot of impatient retail traders would have trapped at this supply zone as they have set their sell limit order at this supply zone. And now we can say that this supply zone has turned into a demand zone. Now let us wait for the price to reach to this supply turn demand zone. Here is our entry point. A lot of retail traders gets trapped at this point also. It is because they keep their stop loss inside this swap zone. And which is why we recommend you to always keep your stop loss below the demand zone. And as you can see that we ended up making up a profitable trade into the market. The breaker block is created into the market in order to induce the retail traders into the market, and the smart money creates the breaker block as they need sellers into the market to buy the stock during a bullish scenario and vice versa in a bearish scenario. But the market does not always makes a breaker block. Sometimes the market may move slight above the supply zone and then again continue its existing trend. Let us see one example of it. Here we have the Euro-Yen chart on 1 hour time frame. We can see market doing the break of structure to the downside, which indicates that the market is in a downtrend. And then we can see market making big bearish candles that created inefficiency into the market, and thus, we would draw a supply zone from the small candle that formed before this imbalance candle. Now let us wait for the market to reach to this supply zone. We can see price coming back to this supply zone, and thus, a lot of traders would initiate their sell trade into the market from this point. Let us see what would happen if we would initiate our short trade from this point. So, as you can see here that the market hits the stop loss and then continues moving downwards. A lot of traders would also initiate their buy trade after seeing this green candle forming above the supply zone, as they think that the market has switched its character from bearish to bullish. So, how do we know if this is a fake reversal or a breaker block? In order to find this out, we must analyze the candles that are formed on the supply zone in the bearish scenario and bearish candles that are formed on the demand zone in the bullish scenario. If the candles that are forming are big candles with smaller wicks, then we can say that a breaker block has been created into the market. And if the market makes small candles with big wicks, then it is called a fake reversal and not a breaker block. But the breaker block cannot be only confirmed by this candles. For a breaker block to be valid, it must come back to this supply turn demand zone in bearish scenario and then move upwards. Now let us move on to the strategy that you can use along with the breaker block in order to make huge profits into the market. So, in this strategy we would use the breaker blocks along with the multi-timeframe analysis. The first step in our strategy is to plot the demand and supply zones on the higher time frame, and then we would switch over to the lower time frame for confirmation and entry. When the price taps into the higher time frame supply or demand zone, there are higher chances that the market would respect those zones, as there are a lot of limit order being set at these zones. Let us learn this strategy with an example. So, here we have the euro-pound chart on 4-hour time frame. Let us mark the supply and demand zones on this 4-hour chart and then move to the 1-hour time frame chart for confirmation and entry. So, here is the same chart on 1-hour time frame. We can see that the price is doing the break of structure to the upside, which is why we would plot the bullish order blocks. We can see market rejecting this supply zone by this big bearish imbalance candle. And this demand zone has now turned into the supply zone, as the market made big red imbalance candles with small wicks when it reached to this lower time frame demand zone. So, we can say that this is a breaker block. Now we would draw the order block zone from the candle that formed below this bearish imbalance candle. And then let us wait for the market to come and tap into one of these zones. We can see price respecting this order block zone, and thus, we would initiate our short trade into the market from this point. We would keep our stop loss above the order block zone and place our target at 3:1 risk to reward ratio. And as you can see that we ended up making up a profitable trade into the market. Now let us see one more example of this way. So, here we have the Euro-New Zealand dollar chart on 4-hour time frame. We can see price making the big bullish imbalance candle that created inefficiency. And thus, we would draw the demand zone from the previous candle that formed before this imbalance candle. Now that we have drawn the demand zone on the 4-hour chart, let us move to the 1-hour time frame in order to look for confirmation and entry. So, on the 1-hour chart we can see that the price is coming back to this higher time frame demand zone. Now let us wait for the market to reach at this higher time frame demand zone. We can see market respecting this demand zone, as it created big bullish imbalance candle when it reached to this demand zone. This indicates that there were a lot of buy limit orders being set at this demand zone, which are now being activated. We can see that this bearish order block zone is not being respected into the market, as the market created big bullish imbalance candles when it reached to the zone. And which is why we can say that this supply zone has now become a demand zone. And also, we would draw the bullish order block zone into our chart. Now let us see which zone the market would respect. We would initiate our buy trade from this point. We would keep our risk to reward ratio at 4:1. And as you can see that we made a nice 3:1 risk to reward ratio through this trade. Now a question might arise into your mind that why did we use the supply and demand zones and not any other instrument? So, we did these because the price generally respects the higher time frames supply and demand zones more than any other zone. So, using a higher time frame supply or demand zone along with the breaker block concept is a nice way to make up a profitable trade into the market. This brings us to the end of this video. So, in this video we share the best strategy that you can use along with the breaker block concept to make up a profitable trade into the market. Now before we end this video, if you found this video useful then don't forget to like the video and make sure that you subscribe to our channel and hit this bell icon to never miss out any of our upcoming videos.